Hi, everybody. Thank you for coming to my channel. I am a real estate broker in the Phoenix area. I've been doing real estate for the last 18 years. And today I am doing my Phoenix real estate market report on the Phoenix market for April. And also, if you like what you see on my channel, make sure you subscribe below. Hit the subscribe button. And also, all my contact information, my social media, and everything is under the description of the video. So if you want more information or you want to contact me, you can click on that and get directly to me. So let's get started. If you guys have watched my previous videos, the last one I went over YouTubers and how they are over exaggerating the real estate market and making people feel that the market is going to crash and we're doomed and all this stuff. So these are some of the headlines that you can find on YouTube. I like this one here. Tennessee is screwed. This is bad. Foreclosures up 556%. Don't fall for the lies. 2023 supply shock. Builders are out. Builders are going bankrupt. So YouTubers, like I talked in my last videos, that they mainly want to get views for people to watch their videos, and then they make money on the advertising. So don't get caught up on a lot of the YouTube videos from people that are not real estate professionals or licensed realtors or that are professionals in the market. And then, so here's another one that's kind of funny. YouTubers, um, they've been waiting and saying, "Oh, we're going to crash, we're going to crash, we're going to crash," and so they're yelling here, "Crash already!" And the Phoenix real estate market is going up. Looks like we bottomed out here in December. So the real estate market prices have started to edge back up again. So here we are. This is kind of the market cycle. We were in skepticism here in January, and then interest rates shot up back up to 7%. So everybody was in despair in February, and then interest rates are coming back down again, which I'll get over. I'll discuss in the video further along here. But currently, we're in skepticism right now. Still kind of worry about where the market's going to go. Bank failures. If you guys are worried about bank failures, I got some statistics here that show that there's been a few banks that have failed recently, but it's not a staggering amount like we had in 2008. So here's a statistic on that. So back in between 2009 and 2014, we had 482 banks that failed. In 2019, we had 4. In 2020, we had 4, and then this year we had 2. So 2 compared to 482 bank failures is really nothing. So don't worry about banks failing and going back to 2008 with the big market crash. So here's the mortgage rates and the treasury yield. In my previous videos, I explained the correlation between the mortgage rates and as well as the 10-year treasury yield. So basically, once again, as more and more people buy bonds in the market, the mortgage rates tend to go down. So here's the bond market, and here's interest rates. So as more and more people are buying bonds, feeling that the U.S. is a safe investment, then our interest rates have gone back down. So here we kind of shot up close to 7% in March, and now we're at 6.16% as far as a mortgage rate. Here's mortgage rates compared to your conventional FHA financing. You can get a better interest rate if you go FHA, and also you can put less of a down payment down through FHA. So there's a little about a half a point difference there between the conventional and FHA financing. So here's a breakdown of different financing. VA is still in the market. FHA, conventional, and cash buyers. 25% are cash buyers as compared to previously it was more about 33%, which was driving up real estate prices as well. And I don't know if you guys had heard the headlines, but FHA is making 30 basis point cut to their mortgage. So they're allowing um, a higher amount of financing for FHA. I believe it's like 534,000 that you can get an FHA loan for. So more and more people are going FHA, and they're making the interest rates lower with 30 basis point cut. Here's the market accepted contracts. Accepted contracts are up since the beginning of the year, as we suspected. Usually during the holiday season, things kind of slow down. And then after the first of the year, accepted contracts tend to go up. Now here's a historical chart here. As you can see, that accepted contracts are lower than normal for previous years. So that means that the demand is low. But since interest rates are low, on some of my previous videos, I discussed once the rates get closer to 5%, then more and more people are going to jump in the market because it's more affordable for people to afford the monthly payments. So that's we could probably expect in the next few months to see this kind of shoot up again if interest rates continue to go down. Greater Phoenix activity, active supply. So since April, we had a surge of listings that came on the market, but now since October, we are down 35%. And so active listings are actually going down. So the supply is not skyrocketing like a lot of the YouTubers are saying. And here's active, which is supply and demand under contract. So as you can see, the supply is low as well as the demand is low. So that's causing prices to be more in a seller's market. We're not the active supply is not shooting up, which would cause the inverse in real estate prices. So this is the supply and this is demand. Supply and demand are about even right now. New listings. So we're also very low for new listings that are coming on the market as compared to historically. So 2022. So this is the lowest that it's ever been. As of March 31st, we're down 18.1% for active new listings. So less and less people are putting their houses on the market because they don't have to. Active listings in Arizona Regional. So this is another, goes all the way back to 2005. So we are currently the fourth lowest count of active listings that are on the market. So we're not all the way down here. This is more of what happened during 2022 and 2021 when active listings were really low. And this is 2008. So as you can see, we are nowhere near a market crash with active listings overburdening the market. Here's pre-foreclosures. If you're worried about pre-foreclosures, pre-foreclosures are not skyrocketing either. In 2008, we had 10,558 foreclosures, and currently we have 393 active foreclosures as of March. These are the pre-foreclosures, so this is before they're foreclosed upon. And the next slide is on the completed foreclosures. So there's only 33 completed foreclosures. So a lot of those pre-foreclosures were actually worked out with the bank or another investor bought it before it went to foreclosure. New single permits. As you can see here, permits kind of are down since April 2022. It's down 74%. So if builders are not building more houses, which Phoenix has a low supply already, we don't have enough houses for people to buy. So if housing permits and builders are not building anymore, that's just going to continue to fuel the appreciation of values in the Phoenix area. Contract ratio, this is between the number of under contract divided by active times 100. Historically, as you can see, that since the beginning of the year, we always see the contract ratio increase. This is 2022, which is an unusual market, as well as 2022. But like I said in the previous slide, interest rates went down, so we don't have um, as many contract ratios increasing. But as interest rates go back down, then we should start to see this ratio go back up. And here's historically, so we're more closer to the 2019 market and 2017 market as comparatively to the contract ratio. And this is 2021 to 2022. Now, are we in a buyer's market or a seller's market? So uh, this from the Cromford report, we're in the green here. So it specifically states that we are currently in a seller's market. Supply is low and demand is low, but demand is a little bit higher. So therefore, supply is a little bit higher. So we're more in a seller's market, as you can see from this market in here. So this is a kind of a cool slide that I got from the Cromford report. It's basically a when to buy and when to sell. So this shows you if you buy at the beginning of a seller's market and sell at the end of a downturn of a seller's market. So you'd buy here back in 2003, and if you sold in 2005, you profited. Here, 2008, and you sold here in 2009. I actually bought a property in 2011, and I still have it actually, but looks like I got in at the bottom of the market as well. And currently here, if you would have bought, looks like in February, you had bought at the right time, and then so you just kind of wait till the market goes back up and wait for the downside of the market to go down to sell it if you're an investor. So this is kind of a cool slide to kind of look at and compare. And this shows you based off of price per square foot when you buy and sell. So it's kind of similar to the other slide. Okay, now back to buyer's market and seller's market. So like I was saying, most of the markets here are in a seller's market again. So Surprise has actually gone up, so it's added to the Surprise is now in a seller's market. Chandler and Gilbert is a hot market, probably because of the Intel plant out there, and there's a lot of stuff going on. And Scottsdale is number 8 as far as a seller's market. Balanced market is a good year, and then these markets are still in a buyer's market. So if you're looking for a good deal, might want to consider Queen Creek, Maricopa, or Buckeye for some of those from some of those markets to take advantage of the prices. Weekly number of price reductions. So 13% of all active listings had a price reduction in the last 13 weeks. Median price reductions around 10,000. And median days on market prior to contract is 31 days. As compared to January, it was 56 days. So as you can see, the demand is definitely picking up here in the Phoenix market. Okay, closings involving seller paid closing costs. Well, 47% of all transactions had some sort of seller paid closing cost. Now, as interest rates are going to continue to be high, we're going to continue to see seller paid closing costs in the market for quite some time until it gets closer to the 5% mark, like I talked about before. And this is a dollar amount here. If you're looking to buy, you might want to ask the seller for around $9,000 to $10,000 in seller cost assistance, and you can definitely use that to buy down your interest rate to make the purchase of the property more affordable for you. Appreciation wise, if you look at the price per square foot, this is what this is comparing here. So from April 2022. We're down 8.4%, March 4.8%, February the same, January. So if you bought anytime below this mark here, you still have equity in your property. But if you bought around here, then there's some depreciation of your property. but don't worry, the values will continue to go up eventually over time. Real estate is a long-term purchase. And then if you were looking at median price, our median sales price, this shows you we're down 11.9% since April. From peak to trough, which is the bottom in December here, we're down 13.5%. And since the interest rates went up, we kind of went back down a little bit more here in April, but we're expected, as interest rates are low, prices to go back up. Well, that's the end of my video. Appreciate you watching. Like I said, if you do like what I present and what I offer, definitely subscribe to my channel below. And if you have any questions, if you're interested in selling or buying, please feel free to reach out to me. I'd be happy to help you with your real estate needs. Thank you for watching.